S&P trying to get over a critical level and doing a fairly good job with a close above that 4210. We're going to talk about why this is so significant. Nasdaq continues to be in a bull market that most people are having a hard time believing, which is actually good for us. We're going to explain why. This is a key level that has become a support. We're going to explain why that level is probably going to hold. NVDA beat and exceeded all earnings expectations and raised higher than the highest people on the street, setting a record-breaking number. We're going to talk about what this means for semiconductors, technology in general, and also for S&P companies. IGV continues to break out, and now we are from a stage 1 to a stage 2. We're going to explain what to do and what names to watch. Also, a couple really exciting companies are coming out with earnings this week. AVGO, CRM on the backs of Workday being up 17. Hey everybody, welcome back. So in this week's Saturday edition, what we're going to do is go over exactly what I just explained in the preview, but you're going to want to watch a couple parts of this a couple times, and there might be some of you that actually want to take notes. As always, subscribe to the channel, click all notifications. What we go over here is extremely timely and actionable. If you were watching last week, you should have done exceptionally well considering what happened. So we can see this key level on the S&P, and we can see the issue that we're having. Now, the nice thing I like about this, and I'm going to walk through it in a minute, is I keep walking this level up. In other words, as though it's small, I keep walking it up anyway. And I think that's important. I'll show you what I mean by small. Small refers to the size of the move. So in other words, when you come here, you start here and you're going, oh, well, it's that 4180. That 4180 is going to be, that's going to be a real problem for us. We're going to have to watch that 4180. And then you start kind of coming up and watching that 4180 and going, oh, well, it's really this up here. It's really going to be this 4210, right? That's really going to be our issue. And then 4180, and you see the rejections. Well, now, yeah, see, that's it. And then we get over it, pull back, retest. Okay, well, now 4210 is our real issue. So that's what I mean by saying small. So what they really have done is kept us in this range for a period of time where this was our nemesis, right? That was the thing that we couldn't get through. Now, I want to be really clear about this because it's very important. You have been unable to clear this level and close above this level all year long. There's not closes in here, right? Nothing is really there. Then you come here and you start closing above 4180. And if we start coming over here on the hourly and you drill in, you're going to notice a couple things. You started getting closes over here, pulls back, fails. Now look at the closes that you're starting to get again in this range right here. So when you start coming across and looking at this, I think that's significant. Now you come here and you mark that high and you just drop a line straight across and go, okay, well, that's the new level, right? So the level that we were looking at before has now changed to about here. And that becomes the level that we're looking at now, this 4225 level. And we're going to have to watch that, but that's starting to become the new level. So what they're doing here is they are quietly walking us up as we're debating whether or not, or well, I'm not debating, but a lot of people are debating, are we in a bull market, are we in a bear market? Is this like 1987? To be candid and save everybody a lot of time, this is nothing like 1987, and anybody that is saying that has absolutely no clue what's actually going on. Let's just be honest about it at this point. So if you see what's happening here and you see how we're setting up, right, that's pretty clean what's happening. You don't need to overthink this at all. You can see your support levels. I mean, to me, they're absolutely glaring. Where these levels are at. This 4116 has held repeatedly on repeated attempts to break it. I mean, if we were to look at the attempts to break the S&P, it is just staggering how many we just kind of blew off, that we couldn't even get below that level. Well, there's a reason. You have demand. You have buyers down there, and they want to buy at that level. Now, the support is coming from a couple areas, and we're going to explain this for the S&P to begin with. So what we're seeing is we're seeing these crosses, golden crosses. I use a 55 SMA. Most people use a 50. Use what you're comfortable with. 200 SMA. You can see the cross right here. You can see how we held in here and then flipped, and that was a clear sign. But what we needed to do is we really needed to get through a level, a key level. Now, this is where we broke down through the pandemic, and that resistance became support. And we should all be able to see that, but you should see that test right there, and you can see how that was resistance there. And then you can kind of see how it was support here on the 22nd until it wasn't support and we broke down here, and then it was resistance until support, until it was retested here. And guess what it is now? Now it is support. So that's really important for us to grasp, that we now have support where we had major resistance, and now we're flipping levels. So I want to be really clear about what's going on here with XLC. This is Meta, this is Google, this is Netflix, okay? Your communication names. So this is a pretty clear pattern on what happened here. So right up here, you start going sideways and churning, and that's pretty much your stage 3. This was your stage 2 where you're coming up, and then this cataclysmic event the whole way down was a stage 4. Then you start forming a level here. Now that level that you start forming, you can say a couple different things about it. You could say that right here from that stage 4 on, that line is your demarcation line, and that you got over that, and once you got over that, you got through your stage, right? And I don't really like that one. Let's fix that. So what I'm getting at here is this. So you can make the argument that your stage 1 is right here, and I don't really like that one either. We can make that better. So what we can do here is, let me just draw from that coming over, because that's significant. And you'll see here, I'll carry it all the way through on why that's so significant, right? So you can actually see how support, resistance, resistance, support came across. Now, so for whatever you want to call it, whether you want to call it to here or here on the stage 1, we can all debate that, but that's your stage 1. Now, what I really want people to get about what I'm pointing out with these stages, and you're going to see this a lot, this is your stage 2, okay? Does this look like it's over? Does this remotely look like this part of this stage? If there's 4 stages to a chart, and let me be very clear about this, I believe that there are 4 stages to a chart. Does that look like it's over? It doesn't look anything like it's over. It looks like it's just beginning. It looks nothing like these massive moves that you've seen. Now, it doesn't mean you have to have the same kind of massive move, but we're starting to see strength in the S&P. The reason for that is because certain sectors are starting to get tighter. Others are not going down as much, but XLC, XLK, this is breaking out. I mean, this is very clearly breaking out. 45% of this is Apple and Microsoft. Now, again, we're going to just make sure you get this. So, stage 2 is when you're coming up. Stage 3 is when you're going sideways and trying to figure out what you're going to do with your life. Stage 4 is when you start coming down, okay? And then what do you form? You form a stage 1. Well, where does that stage 1 start? Well, that's always open for debate because it gets kind of wonky in here, right? But if you just wanted to be super technical, you're probably going to say somewhere in here was your stage 1, right? Right around here. And then, well, when do you come out of that stage 1? Well, you didn't really come out of that stage 1 to here, right? And now if you look at it from that perspective, you're just beginning. So this idea that, quote, you missed the move because you're expecting this again. You're expecting pain again, right? You're expecting just to rally up and drop. And what we have to look at is this market looks nothing like this. I'm going to just be very blunt. Like when you have these crosses, a death cross here with a 55 or 50 crosses to the downside, that is a long-term bearish signal. The exact opposite is true when you're here. That is a long-term bullish signal. It's why I've been fairly bullish all year long. Certain periods of time absolutely confused about what was happening out there because there were so many mixed signals. But we have support now in the S&P, and that can lead to higher prices. Do I think that we're going to get back here? I think we're going to get back here, in my opinion, faster than anybody thinks. And then they're going to think that that is it. And they don't realize that they just made a huge multi-year cup. That's what I think happens. Now, what happens in the meantime with the debt ceiling and the limits, and we all can make our plans and then we go from there. But this peak right here, just to be really clear about that before we go forward, get into the names and start getting into the minutia. And here's your pandemic, right? So we collapsed and then, oh, well, we're back to high. So clearly I missed the move. Okay, did you? Because there's the move. So did you miss it? Let's be really clear. The amount of money that came in during the Fed, that was all that drove the market. It wasn't earnings. It was just the Fed driving the market, buying bonds, buying mortgages for some godforsaken reason. and it just drove the market up. This is an earnings move. This is substantially different. This will have winners and losers, and it's up to us to find out what those winners are going to be. Make sure that you are signed up for the newsletter and that you get the newsletter. It is free. There is a link in description to get it, and I would strongly recommend that you get it so you can see the top 20 charts that are on the week. I do that every Saturday, and it's a daily one. And then by Monday, there will be a whole piece together on NVIDIA and what exactly happened and why it's so powerful. It'll be a compilation of what we're about to go over. So here we are on the Nasdaq, right? We're going back multiple years, so you can see it. So we're not going to get into this stage 1, 2. We're going to just hop right in from the 2, okay? And let's start over here so that we get it. So we're going to start in from the 2. Then we're going to go here and go, well, this was our 3, and then this was just the pain trade, right? The whole way down, like the thing you never get used to again. And this is what happens to people. I want to be really clear about this. You get slapped so many times, you stopped asking questions, right? In other words, you just, every time you raised your head up and you stayed with the position, they just whack-a-moled you, for lack of a better term, right? So you stop poking your head up, okay? And that's just learned behavior. That's why the market's so fascinating, because that's what happens. And then as soon as you think you have it figured out, you don't, and the market changes. And that's exactly what's happening now. If you look at social media, and I would strongly suggest that you spend some time this weekend and look at who you're listening to on social media, because the amount of people out there right now, it's just staggering how they're not getting what's happening. And everyone's entitled to their opinion until it comes to earnings. And then when earnings start, quote, doubling on multi-billion-dollar companies, and I'm going to show you this in a moment, and you're still negative, you're on the wrong side of the trade. It's not really up for debate. It's very objective. Okay, earnings were supposed to come down in first quarter. They went up. Okay, now you have names like NVIDIA, and I'm going to show you some estimates out there on NVIDIA that are absolutely staggering. My point saying that is I'm just watching a lot of people saying don't get involved. We all get influenced by external forces. I'm not going to get all earthy. Just be really careful of it right now, okay? If you're watching a YouTube channel and all they keep doing is saying stock market crash every single day, and now we're up about 30% from the trough, it might be a problem, and it may interfere with what's going to happen over the next 6 to 18 months. So if you see what's happening here, right, and you can see that breakout on the Nasdaq, right, here we are again. Golden cross, death cross. Well, let's talk about what's getting us there. To be clear, here we are again, golden cross. Now, NVIDIA came out with earnings. Now, these earnings were so good that they defied everybody's expectation. And I mean everybody. Nobody was even in the ballpark of where they were supposed to be for earnings. I mean, it was absolutely staggering. Let's get rid of this one for a second. It was absolutely staggering what they did. So let's just talk about this, okay? So they beat by 10% on the revenue side. And then the surprise was a 20% beat. Now, I saw this headline and I said, oh, that's a good quarter. Then I saw their guidance. Now, the best thing that I can do is just use this analyst and show you this. Now, this is from Evercore, and this is a very important statement here. And I want to go through all these line by line, and you might want to listen to this or at least read this a couple times. Okay, so obviously they are extremely surprised, but what was overly surprising was this 11 billion. So we were looking for a $7 billion estimate on the quarter, and they're coming in at 11. Okay, this is 53% better than the consensus and something like 40% better than the highest estimate out there, okay? 3.8% billion, it's just not normal. I'm going to change the colors of these for this background. So if you look at that, the underlying driver here is the data center. Now, I want to point this out, okay, because this means routers and switches, and we're going to get to that. So just remember this. The underlying driver here is the data center. Do you think that data centers are going to benefit from what NVIDIA is doing? Who has data centers? Okay, start connecting the dots, right? Which is expected to essentially double from 4 billion in April to 8 billion in July. So let's go through that again. The underlying driver here is data centers, which is expected to essentially double from 4 billion in April to 8 billion in July. Okay, so they're talking about 100% growth in data centers quarter over quarter. in a multi-billion-dollar industry, okay? This is not something that happens every Tuesday. This is something that happens once in a decade. Let's clean these off, okay? Once in a decade, if you're lucky to catch this. And this is why I'm so emphatic about watch where you're getting your information from about this, quote, crash that's coming, okay? Because any industry that's out there that is doubling every quarter, okay? And I don't know if they double the quarter after this, but it's not going to go down. I mean, that's pretty obvious, right? So if you see this, you must understand that this does not happen all the time, right? You have to get that concept. The only thing that I can compare it to in my lifetime was .com. And this is the situation we're in right now is very glaring to 1995, 1996. And we may get into that if we have time. If not, I'll do another video on Monday. We would note that some bulls were thinking 10 billion. So just so we're clear, 10 in EPS. Let me rephrase that. 10 in EPS, not 10 billion. Okay, so $10 was the estimate. Into the 2025 timeframe, there's a litany of information in this, guys. And so it's really important that you spend time and read what I'm going over, okay? Some bulls were thinking $10 in EPS. Now, that is substantially different, okay, than what happened. Well, NVIDIA will be earning $8 on an annual basis in July. Okay, they are 2 years ahead of where this estimate is. They're at $8 already, right? So in fiscal 25, people were saying, oh, you're going to earn 10 bucks. Now they're like, oh, we'll be earning an annualized $8 by July. Okay, so that is substantially different. The takeaway is the bullish views of 2025 are very conservative. So where do we go from here? Near-term management highlighted, data centers tracking significantly higher. We are now modeling 55% HH, which would likely prove conservative. It sure feels like nearly every cloud dollar is going to NVIDIA. We also note multiple products ramping H100. We're going to get into this in a minute. Grace Hopper, Bluefield, and Spectrum 4. So what you might want to do is educate yourself, and I'm not going to do all of them. I'm going to do H100 so you can just see what's going on out there and go and look at who makes these products and what other pieces you need, where they're manufactured at, who are the foundries. There's a lot we're going to go over here today. You can see where I'm going with this, hopefully. Also, Jensen looks to announce, Jensen's the CEO, and he's also the founder of the company, worth about $38 billion. So if you take a look at this, AI connectivity solution at Computex on Sunday night. Let's go through this again. Jensen announced new Ethernet-based generative connectivity solution at Computex on Sunday night. Medium term discussed $250 billion in spending on data center infrastructure annually, with accelerated compute only 6 to 8 penetrated today. NVIDIA discussed there is a $250 billion spent on data center infrastructure annually, with accelerated computing. Quantum computing is how I refer to it. If accelerated computing is different than quantum computing, please comment and let me know that, because that's above my pay grade. I think they're interchangeable. They might not be. And if you are in that field, or we have a lot of really smart people that listen to this, so if you are in that field, please comment on that. With generative AI driving clear need for accelerated computing, there's a clear, very long runway here. Okay, runway meaning time frame. So these people that are out there saying, oh, well, this is only gonna be 1 quarter. Okay, they're telling you for quantitative computing, you're at 6 to 8% penetrated today, with AI driving a clear need for accelerated computing. So in other words, the accelerated computing, your quantum computing as I refer to it, you need for the AI. There's clearly a very long runway here. Our estimates move significantly higher. Now, pay attention to this part of it. 23 revenue earnings. Okay, so now we're at $44 billion, okay, for this year. Okay, $44 billion is where we're at. $8 consensus, $8 now. Consensus, $30,462,000,000. So when people are out there saying, well, how high can NVIDIA go? Where could these stocks get to? They just took a multi-billion-dollar company, added $200 billion in market cap to it, and doubled their earnings predictions. Some people are going to say they didn't double. You're right. It's closer to 80%, but it's easier to just say double. Then you look at fiscal 2024, $60 billion. 1150. Let's just get that, okay? 60 billion, 1150. All right. So fiscal 24 here, 1150, 60 billion. A year out time frame, okay? The highest estimates on the street were 10. Everybody is going to have to take their numbers up across the board on NVIDIA, on every supplier of NVIDIA, as long as NVIDIA uses them, period. It's not a debate any longer. And that's the part that I'm trying to really hammer home. This is not up for debate. This is fact. Unless some event happens, war, default, there are out circumstances that can happen, and we can go, and we're definitely going to have pullbacks. But I really need people to get this, because you're not going to see this very often. You're not going to see cycles like this very often, and people need to understand that. We maintain our outperform rating in NVIDIA as a top pick. Our price target's 500, reflecting 28, 25 earnings power, approaching $18. Reflecting 28, 25, 26 earnings power, approaching $18. Highest estimate was on the street at 10. They're at 18. You can see why I said you're probably going to go over this and what I'm saying a couple times. You're going to want to listen to this over and over again. At least take notes, please. So why the bulls are here thinking 10, right? They're the bulls. Okay, they're at 18 now. Okay, you have a multi-billion-dollar company that just doubled its earnings. Relative to aftermarket 380, this represents another upside of 30%. Thank you for bearing with me as I went through that. Please comment on me getting that specific. It's pretty specific. I had some people saying, hey, can you dumb some of this stuff down? Some of it you can dumb down, some of it you cannot dumb down. That needs to be watched over again, and I would take notes and I would really pay attention to that. And I would strongly suggest you listen to the conference call and read the earnings report yourself. But it's very clear what's going on here. Now, if I take this trajectory from this peak where we had the influx down to here, and I use this upper target range, so that's my upper channel, that gives me an upper target range of right here, which puts me at a 480 target is possible on this stock. If you think that can't happen, please go listen to what I just went over for 5 minutes. Now, if we just take this, which I really don't like doing because we're just taking the peak, I'd rather it go sideways. But if I took the peak from here and I take the trough from here, okay, what you're going to see is you're just going to see some pretty key levels. But 394, 395 is right where you're sitting. 333 would be the pullback. And your first real fib level is roughly that 570. This fib level is based upon the golden ratio. Then you come here and you look at the other ones and you can see 471, 512, get it? So you can see the potential here. I could see this getting to 480. I don't know how fast it happens. I think the sooner that people get this, the sooner these names start picking up. And I just cannot stress this enough. The amount of people that are not doing the due diligence and just looking at technical charts right now, what I see on like FinTwit or YouTube, it is exhausting. And all I can tell you is that anybody that is going to do the work right now, anybody is going to be crushing people out there because they're not doing the work. They're just not connecting the dots yet. And it could just be that they're just got so used to just someone else connecting the dots that when true alpha happens, meaning when you have to go and do the work and figure out who the winners are going to be, they just simply don't either know how to do it or just don't want to do it. Either way presents a huge opportunity. AMD, as far as this move, this was significant. This is really important. AMD is going to be a player, and the reason that AMD is going to be a player is because the demand for NVIDIA chips is we're going to have supply constraints. And that's probably going to knock NVIDIA down and back up, but you're going to have supply constraints. Right now, I can tell you that NVIDIA's #1 foundry, which is TSM, okay? TSM, #1 foundry, you can see how it's moving right now and how you're breaking out of this. Remember how we just went through a couple things? Let me just walk you through this again. Here's your stage 2. Here's your stage 3. Here's your stage 4. Boy, Buffett's going to be kicking himself selling this at 80, isn't he? Right? And then what's this? That's your stage 1. Okay, coming across, right? Are you through your stage 2 yet? No, your stage 2 began last week. Okay, so you have to understand again where you are in the pecking order. Chips made, these companies move by capacity utilization. Okay, that is how much the product is being produced, right? Capacity utilization, simple enough to understand. We're going to want to watch that 107.52 level, 107.52. Why is this important? This is important for a whole litany of reasons, okay? You want to watch this area, but capacity utilization is going to be over 100%. Well, if capacity utilization is over 100%, you can only make so many chips, right? Okay. That leads us to this. Now, this is a site called Extreme Tech. NVIDIA's 100 AI processors are selling for over $40,000 on eBay. Everybody's talking about this RTX 5800, 5900. Is it going to be $6 more, $70 more? Look, they've got a cloud computer, supercomputer they're putting on the internet. They're going to throw out there in the cloud, however the cloud works, right? And they're going to charge $37,000 a month for that. They're selling H100 processors, and they're selling for over $40,000 on eBay. Okay, if you just look at this, right? And NVIDIA's latest AI Optimus graphic cards are going for even more than their stratospheric retail price on eBay. Multiple cards are listed on the site for more than $40,000. Okay? Massive demand, supply constraints. I'm just going to copy this right from Twitter. I would strongly suggest that you follow these people. They do a great job of just stating the actual facts on conference calls. If you don't have time to read conference calls, I'd strongly suggest that you follow them. But just this line, this is from Jensen, our entire data center, a family of products, H100, Grace, remember all those names we just went over earlier? Grace Hopper, NVLink, Quantum 400 is in production. We are significantly increasing our supply to meet surging demand for them. Now, the question I always get is, who is going to get this? Who wants this? Okay, here's the CFO. Enterprise demand for AI and accelerated computing is strong. For example, Bloomberg announced it has a 50 billion parameter model, Bloomberg GPT, to help with financial natural languages processing tasks such as sentiment analysis, named entity classification, new classifications, and question answering. So when asked who wants this, everyone with a product or service is going to want this, period. Okay, the question is going to become affordability. And that's what's so interesting about what's happening now. It's very different than what happened before. Some of these names look like they're going to absolutely explode to the upside. AI, we had a bunch of people in the community that were trading this one on Friday and Thursday. They did quite well. If you are interested in joining the Alpha Chasers community, the waitlist is now open. It's only going to be open for a couple more days, and then we're going to shut it down again. So just FYI. Now, if you just look at this little level in here, and you just kind of come up with this, what are you in? You could argue that you can drop it down here. It sure looks like a base to me. You come all the way across. Let's take the top of this. Okay, so that sure looks like a multi-year base to me, right? And then you kind of color that in and just take a look at it. So are you in a stage 1, a stage 2, or a stage 3, right? You're definitely not in a stage 4. So the potential of this, when people are going to sit there and go, oh, I missed it, right? This is when you can shine on these kinds of names. I'm not saying this name in particular. I don't know enough about this particular name besides talking about it technically, but you want to see a base after a stage 3 and a stage 4, right? Look at that. Okay, it's been a multi-year base. Look at the volume that's coming in here. Okay, it's probably not going away. But the question I keep getting is AMD, is this legitimate? Yeah, Microsoft partnered with them. Why? You're going to have supply constraints, and that's going to lead us into a couple other names. First and foremost, AMD can see this 165 again very easily. Okay, everybody is going to be clamoring for how are they getting these chips. And I'm not even going to get into all the nuances, only some of them today. So AVGO, for example, this had earnings lined up for this week. I think it's Thursday. Let's check that out. So we have earnings on Thursday. Now, those earnings on Thursday are going to be significant. And there's a couple things here. Everyone was excited here Monday because they got this Apple agreement. Tuesday, you got the Apple move. But why on Thursday and Friday did we act this way? Okay, was that the Apple news that did that on Thursday and Friday? Because why the delayed reaction? It's not the Apple news. I want to explain this. I read a ton of information and a ton of research reports. Everybody's watching the NBA finals. I couldn't even tell you that they were going on unless somebody was telling me about it, to be quite blunt. So I read and I like the stock market. If you take a look here, Broadcom's Tomahawk, Trident, and Jericho switches and routers benefit from generative AI adoption as consecutively needs to keep pace with advances in computing. Schaaf said in a note. Okay, Schaaf's note, this is from an Oppenheimer research report, market analysis, and Schaefer is the analyst that follows Broadcom. So we're moving because these switches and routers benefit from generative AI. Where do you put these switches and routers? Data centers. What just doubled from April to July? See how all this is connected, right? Like when you actually put the time in and you start looking at this stuff and you start connecting these dots, this becomes really interesting. Now let me show you something that's absolutely fascinating about AVGO. And this is one that I traded on Thursday and Friday and did exceptionally well with. Hold on one second. Let me show you this. This is fascinating. So your comments were to start showing you more Max Pain and what it means. And I will do that. And one of the things I really want to hammer home is discrepancies. So what we always look for is discrepancies, or what I always look for are discrepancies. Tesla open interest chart, okay? And I'm showing you Tesla for an example before I get into the next one. 200 calls, right? That's where the action's at. There's still open interest for next week. People think it's getting there. Maybe it is, maybe it isn't. I don't know. Pointing out where you're at 194. It had a great day the other day. Everyone got involved because Tesla's going to get into AI, or at least say it on a conference call. You see your volume chart maturity right here, 200 again. Pretty clean where you're at and your basis. And this is the chart I really want you to focus on. And I know that I'm a little cut off there on the side. So this is from maxpain.com. Everything I'm using right here, just so you know, is free. Everything is free. And what I'm trying to point out, and you can go and do this yourself. See where your Max Pain level is? Max Pain for traders is here, okay? Max Pain is here, right? For traders, right? So Max Pain here, right? That is where traders are going to have the worst week. Option market makers are going to have the worst week on the outliers, right? Because this is the cash that they have to come up with, right? So let's just say right now, and they can always reposition, but let's just say right now, because basically what this is a snapshot in time. Let's just say Tesla comes out and says AI 100 times and comes out with an AI car on Tuesday, and the stock goes to 360. They're out of pocket $2.5 billion. Okay, that's what this is telling you. So I'm going to give one more example before we move forward. Max Pain, again, free. Okay, open interest, see where you're at. Here's NVIDIA, 420. Right, and you're probably wondering, why am I showing you this, talking about AVGO? Because you need to understand how significant what we're seeing is. 390 calls, all of a sudden they're going up. People are buying the 400s for next week. That's going up. Volume chart maturity, you can see what they're trading. What are they holding? Well, they're holding the 425s for next week. They're holding the 400s for next week. Okay, so that tells you where they think they're going. Look at how this is skewed. Look at how this is skewed versus what I just showed you on Tesla. I'm gonna go back to this blue for this. That's much better. Color that in as best I can for time's sake. So it's coming across, right? So look at how you're skewed, okay? So Max Pain for traders is down here somewhere, okay? Roughly this 360, 350 level would be Max Pain. Where's Max Pain for the option market makers? How much do you think they're gonna cover their exposure this week looking at NVIDIA? Do you think they're going to cover their exposure, or you think they're going to just hope that it doesn't go to 425 when Broadcom comes out with earnings? Okay, because Broadcom will move NVIDIA, just like Marvel moved the market. Okay, we're going to get into that. So is it 420? Is it 600 million that they want to lose? Right, or is it $1 billion that they want to lose if it gets to 450? Okay, so they have to start hedging, and I'm not saying you're getting to those levels, but they need to hedge. And when they start hedging, they're going to start buying Delta. Well, when they start buying Delta, guess what happens? The stock goes up. Now, you're saying that's great. Why are you talking about this if you're talking about AVGO? Well, here you are. Here's your open interest on calls right now, is right here, okay? 700, largest open interest. 800, why is it here? Because that's all they had. That's all they had. Now they're going to have more. And what do I mean by that's all they had? Meaning that's where the strike prices ended. So when we got to 800 on Friday, I put out a comment in the room that I was actually adding to the position even though we were up so much, and people were saying, why are you adding to it? Because I knew that they were going to try and make sure that this did not get over, because they can't even hedge themselves because there's no strike prices at that time. There were no strike prices. So in other words, they have to go out in the open market and buy stock. I'll show you what happened in a minute. Now look at what they're trading. Now look at what they're trading. Now they're trading the 900s. Okay. Now they're trading the 900s and the 800s. Okay. Where are your puts? Non-existent. So you can see how they're out there literally buying everything. Now, this is exactly why I showed you Tesla and NVIDIA. So here's your max pain chart. This is the max pain level for traders. 690, 700 in this range, okay? 20 million is what they would lose, right? The market makers, okay, if it goes here. 10 million really, it's probably, you know, down there in that level. Now, look at this, look at how you're skewed on this chart. So not only do you want to look at this, but the chart should be convex. It should not be exponential. When you see this, this is the definition of a gamma squeeze. Okay, that is the definition of one. So it just means that, I don't know, we're just going higher. Like the puts don't even do anything for us anymore. We're just going higher. So we have a real problem on our hands. So what will start happening next week? Issuing higher strike prices maybe, going out in the open market, trying to get ahead of it before Thursday, hoping for some kind of pullback. And we all know how hoping goes. So again, comment if you think this is helpful, especially going through the max pain. I'm covering a lot of ground in this video. I could make several videos out of this. I just want to get it all out there and go from there. So if we're looking at these names, I'm going to flip through a couple names here, and then we're going to talk about the market itself as a whole. BOTZ is an AI, essentially, artificial intelligence and robotics ETF. You might want to put this on your list. It does give you exposure to some other sectors, and I think that that's really important, that you get that exposure to Japan right now, quite frankly. And where do I think that this can go? I mean, I think you're going to probably wind up heading back and retesting somewhere in here. What stage are you in? You could say that's a stage 1, or this has been a stage 2. We can have that argument later. But I think that you can see 30 bucks here. CRM has earnings this week. There was a little company called Workday that was up $17. Just a caveat, in the Alpha Chasers community, we bought CRM around 200, and we're up about $15 on it. We bought it weeks ago in here. Actually, on this little pullback right here is where I bought it on a technical chart. I actually walked through it in this video on this channel. Anyway, so you'd see where you're at right here, and you can see how you're moving, and that you're probably going to get up to that level, 221, fairly easy. Can this have a workday move? Why not? Why couldn't it? CRM is actually, in my opinion, a better run company. Are they exactly the same company? No. You don't have to comment below on that. I know they're not the same company. So I think that this could absolutely move. I think it could absolutely move, and I would expect them to come out with some kind of product. ES, I just think that we're going to probably wind up getting to that 43.20 sooner than people think. And I want to just get that out there while I'm thinking about it, because there's a lot of ground to cover here. Google. Now, Google was mentioned as first adopter by NVIDIA. We're really having trouble with this 126.25 level, 125 level. We've had a real battle going on in there. I am long this. It is my second largest position. It was my first, but some other names one other name overtook that. So now you can see right here and what's going on and how we're lifting, okay? That's what you want to focus on. Okay, you see how you're lifting in here? You got to get through that level. It's really important. Okay, so this is something, again, that we started at 109 when they did that AI conference call. And remember, we went over this in a previous video where Loeb and Ackman, all of a sudden, they both took 10% stakes in Google, okay, because they got it, or their analysts got it, most likely, and explained it to them. Now, that's usually the way it is. Someone else does the work, and then someone else takes credit. So I've been saying that Microsoft's going to take out the highs. You're going to see this pattern all over the place. And let me just get the pattern and show it to you, because I think it's pretty substantial that you get this. So you're going to have this curvature here, right? And you're going to see these cups. And then everyone's going to say, oh, it's at the highs, I can't buy it. Everyone's going to miss this. Everyone, I'm telling you, I can already see it coming by the sentiment that I'm seeing. And we're going to discuss sentiment, smart money in a moment here. So you can see this and how you're lifting up. I mean, that's your target, guys. Your target's up here at 475. We're in this at 305, right? We're not even remotely in a position that we have to worry about getting stopped out anymore. So the more you know, the quicker you can position yourself. Just get that. Micron is a supplier to NVIDIA, to all these products, to Broadcom, to everything. Micron is a supplier. You need DRAM. None of it works without DRAM, okay? I was kind of shocked at the initial move on Thursday. I was waiting for the typical, Micron sweep the leg move, and we didn't get it. I'm long Micron. I have calls in Micron. I would not sleep on this. Demand will be through the roof. Pricing power will be through the roof. And again, go back and look at the earnings and what just happened. Just go back and take a look at the earnings here. Let me just show you this so you can see it really clearly. There's your demarcation line. You're over. Higher high, 200 week, higher high. Okay. If we take a look at the Nasdaq, and you can see how you're breaking out here. Does that look like it's over? Does that look like you missed something? Okay? And again, I don't want to get too earthy, what I said about people on social media and things like that. You got to get away from the scarcity mindset, because it's been like whack-a-mole, right? Every time we put our head up, we got whacked over and over again, okay? We're not in that cycle anymore, right? The cycle is over and the cycle has changed. I'm making myself laugh with a little joke there. But NVIDIA, this is really clear what's going on here, and that break's very clear. All right, SMCI, you're going to see this. You're going to see the speculative names, and they're going to act like this. This is not my kind of trade, and this is not something that I would get involved in, except to day trade it. I day traded it on Friday. I had some fun with it. But at some point, this is going to have a bad day. And I say that because here's the SOXX, and I want people to understand this. This thing looks like it's about ready to rip, and all the names I just went through look like they're about ready to rip. But this is Bollinger Bands. This is 3 standard deviations of Bollinger Bands, okay? And what I have here is the purple is the third, okay, and just kind of walk on my way down. And this is your median line, which is usually a 20 SMA. Now, why I'm showing you this is because I just want to point this out so that you get this. Standard deviations tell you the probability of something happening, okay? And I'm going to show you a way to use this. But at a third standard deviation, meaning third standard deviation off this mean line, is extremely rare. If you go back and take a look here, you have a pandemic that got you through one. Okay, you have one where you kind of were touching it in here, but nothing where you blew through it like this. Now, a couple things. Number one, if you blow through a standard deviation line, it usually means in 12 to 18 months you're going higher. There's also a rate of change chart I'm going to show you in a moment here. But if you take a look at this, and how you blew through this, you're going to want to pay attention to that. We actually were in SOXL at 14 in the community, and I just said on Friday at 23, we're up $9 or whatever. I forget what crazy percentage in a short period of time. I'm like, time to take a little bit off the table there. It just makes sense, okay? And I'm not saying you're not going to push. You can absolutely keep pushing, but you're at a level where the probabilities have changed. Now, what do I mean by the probabilities have changed? Okay, this is the 68, 95, 99 rule. So what this is when something's at a 1 standard deviation, you can see your lines here. Okay? There's a 68% chance that you're going to stay in that range. Okay, think average true range for those that use it, right? That's usually how average true range is calculated in some format, 2 standard deviation. When you have 2 Bollinger Bands or a second standard deviation, the chances of being in that range is 95%. Now, what that means is that if you're over and you're out of the range over here, well, the chances that you're going to revert back to the mean are 68%, right? That makes sense, doesn't it? So if I'm out of the range of the 2 standard deviations on 95 via, let's just say that I'm over here, right? Then what's that going to do? Well, that's going to tell me that I have a 5% chance of staying here and a 95% chance of going back over there. Okay, so when I'm at a third standard deviation, I have a 99.73% chance of staying in that range, and I have a 0.27% chance of going higher. I'll take that bet 9 times out of 10 all day long. So when you see this, it might not mean that you sell, and I certainly wouldn't sell everything based upon that, but it does mean that short term, did you get a little frothy? Yeah, maybe we did. And maybe we're going to pull back. And I hope we do. I think AVGO could kick it up again. And that's something you need to pay attention to this week. Now, Workday had good numbers. Marvel had good numbers. Let me show you this. And let's get rid of the bands and go back to this. And I'm not so much concerned even about the bands on these kinds of breaks, right? Because you have an anomaly that changed the game, so the bands will actually widen. What we have to understand is where the money's going. It's going to go into Marvel. It's going to go into anything that is benefiting greatly from this, okay? And this is why AVGO is seeing the move that it is. Now, Taiwan Semi is going to be a capacity utilization. We talked about this 107.52 level. UMC, okay? Why do you want to pay attention to this one? UMC is another manufacturer that is focusing not anywhere near as big as Taiwan on making chips. They are based in Taiwan as well. No one really pays attention to it. See this move on Friday? Do you know why we're having that move? Capacity utilization at Taiwan Semi, okay? Based upon their capacity utilization that you're saying, AMD is probably going to have to go to UMC to make these 3 chips when they partner with Microsoft. That's probably where they're going. Okay, they're probably going to have to go there. They're already a supplier, and you're starting to see that action. So I would pay attention to this. It's a small name that has not moved yet. And you're starting to see this play out everywhere. Even these large names were breaking out. And I want to point this out. This is IGV. This is expanded tech. This is your legacy tech. Okay. And we walked through these ad nauseum, but I'm going to walk through them one more time so that you get this. Okay. 2, 3, 4, 1, 2. Does that look like it's over? Okay. Can you pull back? Yeah. You can always pull back. Anything can happen. But you have to trade what's in front of you. You have to trade what's actually going on. Okay, and we're seeing that, and we're starting to see panic. Like even Netflix, one day everyone's getting rid of the password. The next day everyone's back in Netflix getting their password back. Okay? It's nonsense, but you can see your ranges and utilize those ranges. If you're struggling with which names to buy, FNGU is a 3X, top 10 names out there, and it 3Xs them. Something interesting to look at. Now, this chart, massive one-day surge, all semiconductor index, all cap semiconductors, rate of change. This goes back to 1957, okay? There have been over 20 times where the rate of change has spiked over 5%. Every single one of those times, semiconductors have been higher 12 months later. I'll say it again. Since 1957, since this data is out there, whenever you get a spike of a 5-day, on the one-day rate of change of 5% or more, 12 months later, every single time, the semiconductor index has been higher in 12 months. This is from Bloomberg. It's a little cut off down here. Most valuable chip maker. NVIDIA is now worth more than its rivals Intel and AMD combined, rightly so, quite frankly. But if you look at what's happening here, this part of the chart is really what I want you to focus on. The first $1 trillion chip maker, Intel or NVIDIA. Okay, look at where NVIDIA is, okay, and look at where Intel was. This is the point I'm getting at, and I've been saying this since Thursday, since I read this report. My opinion of NVIDIA is that NVIDIA surpasses and becomes bigger than Apple. I don't think it's going to happen in a year, but I think it's going to happen in 5-10 years. I can't see how someone eventually does not come up with a better mousetrap than Apple. Now, maybe they don't, but no one is anywhere near the level of technology that NVIDIA is. It's going to take a long time for that to happen. And this is the engine that powers. We made a fortune back in the 90s buying Intel when people did not understand that Intel chips were going into everything. And that was on the consumer side. Now we're seeing NVIDIA chips go in the business side. Who has deeper pockets? Consumers or corporations? Bottom line, SOXX is in charge. SOXX had a huge move, levels you have not seen in some time. It's definitely the sector that we're going to focus on and will be focused on for the rest of the year and probably next year as well. Will there be debt limit problems? Will there be rate hikes? Will there be inflation? Yes. Bottom line, nobody cares. Literally, no one cares anymore. And the reason they don't care is because earnings drive the world. That's what drives everything. Please comment below if you like this. I know this was a very long video. There's a lot of parts in here. I would watch this a couple times. I would certainly take some notes, and I would use this video as a reference. If you are interested in the Alpha Chasers community, please click the link below and get on the wait list. Even if you don't take your spot on the wait list, when the wait list opens back up, I just cycle you through again because you took the time to be on the wait list, okay? I know some people get confused about the wait list. You don't have to take your spot right away, but when it opens back up again, I cycle you back through. I hope that makes sense. Share this video, please. I purposely do not run ads at all here. I purposely do not run ads. And I would appreciate if you share this video. There is a lot, I even hate to say these words, misinformation, I'll say the word delusion about what's really going on out there right now. And it's really important for me that people get this because they're not going to have this opportunity. This is a once in a lifetime, once in a decade, I should say, opportunity. Have a great day, everybody. Enjoy your weekend.